Good morning to you, Evelyn. Thanks for joining us this morning on Fast Market. Walmart's been an interesting story for many, many years and really decades as this company has grown and grown and grown and transformed now into an e-commerce giant as well.
Hi, guys. Right. And also, like a lot of companies, Walmart is likely to benefit from a post-pandemic recovery. However, we also saw that it was a really strong performer over the past year as well. And that was tied mainly to how it was able to ramp up its e-commerce offerings. In fact, in its third quarter, which it last reported on in November of last year, it saw those e-commerce sales increase by 79% year over year. But some recent headline news that we've seen out of Walmart lately is that starting today, the company is actually offering COVID-19 vaccinations at more than 1,000 of its Walmart and Sam's Club pharmacy locations across 22 states here in the U.S. And then also on Wednesday, we saw how the TikTok sale to Oracle and Walmart has been shelved indefinitely. So President Joe Biden has shelved this deal, citing potential security risks from Chinese tech companies and also for a general fear of American users' data being accessed by the Chinese government. And to emphasize really why this matters and why Walmart even wants TikTok, I have this first tweet for you guys today. And this Twitter user said, TikTok has been the catalyst for most of my big adult purchases this year, and I haven't decided what that says about me. So people are now spending more time on TikTok than they are even on Facebook. And that information comes out of a State of Mobile report from App Annie, which provides an overview of the key mobile app trends and shifts from the past year. And the report found that TikTok is on track to hit 1.2 billion active users in 2021. And that compares to Facebook's total 2.8 billion active users. And as of August of 2020, TikTok already had 1 billion active users, with more than 50 million daily active users in the US alone. So there's a lot of eyes on TikTok, and a lot of people use the app to find things to buy. I see that a lot actually across the platform. But Walmart does report fourth quarter earnings next Thursday, February 18th. And that report will also include its 2020 holiday sales as well. And that brings me to my second tweet for you guys today. And this Twitter user said, I'm rolling over my gains from Tapestry trade fully into Walmart calls. Walmart is poised to give some big upside surprise with the earnings. And beyond the obvious essential store and grocery part during the COVID times, the upside surprise would be Walmart Plus. So Walmart said that 11% of Americans signed up for its Walmart Plus service within 2 weeks of it launching that. And also, analysts are expecting Walmart to post growth year over year on both profits and revenue for its fourth quarter. But Kevin, my question for you today is, do traders even care about the TikTok deal potentially going through, or is people's focus right now solely on getting back to normal economic conditions?
Yeah, I think people are looking at the TikTok deal like they looked at the LinkedIn deal with Microsoft. They want to see the final product and it monetized before they're willing to say, oh, this is actually really good. So right now there's just a plan and a vision for it. So I think it's much more, Walmart's success or failure is much more important on their turnout of Walmart Plus. Much like Disney and their numbers with Disney Plus, Walmart Plus is what everyone's focused on. So people are going to want to see growth in that. I think some of the announcements the last few weeks with Mark Lowry leaving, head of U.S. e-commerce, that was interesting. So they're going to have to show some recovery from that. But I think the long-term view of Walmart is simply outstanding. So, and this stock is, significantly off of its all-time highs. So there's some room here. I think this is a long-term play that should be probably in a lot of people's portfolios, guys.
Kevin, I don't want to go too far off a tangent, but this reminds me kind of I listened to Warren Buffett speak when I was in college, and he was talking about the difficulties of growing investments at scale. Just to move the dial for something like Berkshire, it's so difficult now. He has to think about companies, not just shares of names. and stocks. And it's similar to a company the size of Walmart, to where I'm going with this. It really does take something like a TikTok to really move the dial for something like Walmart. But even so, it does just depend on what the deal looks like, how it's integrated, all those things. So to answer your question, Evelyn, I would say that Kevin's kind of right there. I think the jury's still out on what TikTok does for Walmart and what it looks like, similar to, as he said, what LinkedIn ultimately became for Microsoft. But we got to leave it there. Great stuff, as always. And thanks for joining us. To say goodbye to Evelyn, I want to welcome in Landon Swan, the co-founder of LikeFolio.com. Join the conversation here and talk some Walmart. So Landon, you guys saw this one and it was jumping off the screen for you. Talk to us a little bit about why as we lead into earnings week for the Powerhouse retailer.
Yeah, so Walmart is one that's benefited greatly from the shutdown and everything like that. Now, it happened to be pretty good timing because they've been working on getting their e-commerce going for quite a while. They've had some failures and sort of restarts, and they kept trying to do it. They couldn't coordinate the front end with the back end when it comes to warehouse and delivery, but they finally got it down this year, or last year actually, and it's been perfect timing. And so if you look at what the delivery and curbside mentions have done, it's really crazy because they had obviously a massive spike around March, April, May when everyone was sort of at home and they had to find a way to get their stuff. And Amazon had shipping delays. You know, Amazon used to be 2 days for everything. And then during March, April, May, all that time, you got pushed out 2-3 weeks sometimes. And so people will not put up with that in a free market. They're going to find a better solution. And Walmart was ready to pick up the slack. So huge spike, as you can see here in the spring and summer months. But what's really interesting is that was not just temporary relief. This was a behavior change. This was adoption and people going back to it, because look what happened around November and December when people were deciding that they needed to buy Christmas gifts. Black November, I think, is what we're calling it now, because Walmart kind of opened that up from Black Friday to the whole month. And instead of going back to Amazon or shopping in stores, people said, you know what, I'm using Walmart Plus. I've got delivery and curbside going. I had a good experience. So they're going back to that. And we're almost at those peak levels during COVID. We're back to that. So we're about 150% up. Really looking strong as far as delivery and curbside pickup for Walmart. And what's interesting is, I know we've talked about this on the show before, but I want to put some numbers behind it. Amazon has 110 fulfillment centers in the United States. If you think about a Walmart store as, instead of a store, but a distribution center or fulfillment center, it's got 4,700. So it's, 45x what Amazon has. So they're able to get people their goods either very quickly through delivery, or you can just do curbside and go down, drive to the store and have it, pick it up in 30 minutes. So a big advantage for Walmart, and they're finally taking advantage of it.
Yeah, Landon, I think you've touched on something here, which is everyone's worried about that delivery and the last mile, right? And how expensive that is. But this curbside pickup that is getting more and more popular, and when you go to these stores, you see the curbside pickup happening, and it's getting more organized and more efficient. That is a margin bonanza for these firms, because you don't have to do the last mile, that delivery truck. You just have the employees that are already at the store bringing out the goods. And I think that is the sweet spot that is making these evolutions of these omni-channel companies so strong. It's the ability to point, click, go pick it up in a half hour, like you said. Isn't that going to end up to be the biggest margin boost for these companies? Not only Walmart Plus, but the ability to go there and get it, have them bring it to your car. You don't even have to go in the store, Landon.
Yeah, I think you're right. And so instead of last mile, you're talking about last 100 feet, right? You have the employee walk out to the parking lot, put it in the back seat, and that's it. That's the delivery. And I think what we've seen is a change in behavior, where it used to be you'd order it online and you'd wait for it to get there. It'd be the next day or 2 days, whatever it is. But if you've got this behavior change where you're out and about already, you're driving home from work, and you just say, okay, I'll go by Walmart and pick up my whatever I need. That behavior change is huge. And as you talked about, the margins are fantastic. I mean, delivery is very expensive. They offer They all offer free delivery, but it's not free. They're paying for it, which means the consumer's paying for it. So if you're able to do that, you can lower prices. And to that point, what's really interesting, if we look at happiness, we always compare happiness of Walmart to Target, and it's always just a complete just thumping, right? I mean, Walmart is around 53% happy, Target's 72%, and that's been the way it is for a long time. However, if you go down and take the LikeFolio data, instead of looking at the company level of Walmart and you look at the brand level of Walmart Plus, happiness for that is actually 73%, just a tick above Target. So huge discrepancy between Walmart in general at 53 and Walmart Plus, the app or the delivery service, at 73. So people are loving it, and as you're talking about, it has fantastic margins. Demand for Walmart Plus, we've got it at about plus 18% quarter over quarter, which I know analysts are going to focus on. So we see a lot of good things coming on the earnings report next Thursday.
Landon, I think this is the ultimate kind of question going forward, and this is where things can be a little bit more resilient. And some of its maybe counterparts in the industry or competitors in some ways could struggle. And so when you think about this in terms of buy online, pick up in store, curbside delivery on one side, and then this full delivery, the last mile that you guys are talking about on the other, things like Instacart to me are beneficial for two reasons. One is they're efficient, but the other side is it's just kind of laziness. It's like the ultimate discretionary expense. You spend that money, someone goes in, does the hard work, and they bring it to you. But if you have a car, you're out and about, like you said, you're on the way home from work, whatever it may be, someone does all that efficiency stuff for you. They go get the items, they do everything, and then they just bring it out to your car. You still get that benefit, but you're not necessarily paying for the delivery, which, was we talked about, is the expensive part for both the companies and the consumer. So to me, even in kind of an uncertain time, you could still see the money being spent, whether that's on like a Walmart Plus membership or another one of its competitors' membership, for curbside pickup or buy online, pickup in store. Whereas maybe the Instacart, the full delivery, is one of those purchases that you say, I just can't afford this.
I agree with you. I would encourage people to value their time more wisely. I think that's the commodity that everyone sort of underestimates the value of. So for someone like me and you, Alex, we're going to be paying for that delivery and go do the shopping for me. But you know what? Times are tough, and there's a lot of budget crunching right now in the country, and so. Absolutely. If you can pick it up and if you're able to get things just a little bit cheaper, then I think it's a good move, especially if you're on your way home from work. Walmart knows that. Their target audience knows that. And so this is a big win for them. Now, when we look at the earnings, they've got, I believe, analysts are expecting the largest revenue quarter on history for Walmart at around 146. I think last year at this time they were 141. Purchase intent for LikeFolio supports that. We do think that they're going to have a good quarter. We do an earnings score for everything, every company at LikeFolio, and it's from negative 100 to positive 100. Walmart's coming in at around a plus 44. So that's early reports right now. That may change next week, but we're definitely leaning to the bullish side. I'd be surprised if they had any kind of disappointment. I think analyst expectations are high, but they're not super high. As Kevin mentioned, the stock is off all-time highs by about 10 points or so. So I think there's a little bit of room to the upside potentially.
Good stuff. Landon, you enjoy the long weekend. We'll look forward to talking to you again next week, and we'll look forward to this earnings release next week. Landon Swan, the co-founder of LikeFolio.com. Always a pleasure.